Hello everyone, and welcome back to my channel. Over the past few weeks, I've been receiving a lot of requests from you, my eager and dedicated students, asking for a detailed video on entry models. It's clear that while grasping analysis and determining a market bias are essential aspects, the real challenge often lies in execution. Knowing when and how to enter a trade can make all the difference. That's why today, we're going to dive deep into the world of entry models. We'll break down the complexities of execution and explore practical entry models that can help you confidently navigate your trades. So, roll up your sleeves, grab your notebooks, and let's unlock the secrets to mastering entry models together. In today's detailed video, I'm going to share my favorite entry models that can take your trading execution to the next level. These models are aligned with my CRT framework, and each one has a unique application. So, without further delay, let's get started. Let's start with the turtle soup models. These are categorized into two types: TBS, turtle body soup. This occurs when the price sweeps the high or low of the CRT, with body closing providing a precise entry point. TWS, turtle wick soup. This model is used when the price moves to the high or low of the CRT and closes inside, creating a wick. Both models focus on capturing reversals at significant levels with precision and to catching the tops and bottoms using the CRT models. Next, let's discuss model number 1, also known as the order block entry, or CSD. When the high or low of the CRT is swept, we identify the last thick down or up close candle. When this candle gets engulfed, it acts as a strong confirmation for entry. Now, what is meant by engulf? When the last thick down or up close candle sweeps the high or low, and the next candle or bunch of candles closes above or below, that thick candle indicates change in state of delivery, or CSD. This model is excellent for capturing major reversals with confirmation in the market, and offers a structured way to execute trades. Now, moving on to the inversion entry. This happens when a previous unfilled fair value gap is violated. After the violation, the level is retested as support or resistance after sweeping the high or low of the CRT. This model is particularly useful for identifying continuation setups after a high or low sweep. This is an advanced market structure shift you don't need to wait for ICT 2022 model. You can confidently enter when price sweeps the high or low of the CRT by hitting the key level and the last fair value gap violated. It acts as support or resistance to move the prices to the opposing end of the CRT. Finally, let's discuss the breaker entry. A breaker is an old order block that gets violated and then acts as support or resistance for continuation. This is a powerful model for trading trends and capitalizing on market momentum after structural breaks. These entry models are some of my favorites because they provide clear and actionable setups, aligned with the principles of CRT. Whether you're looking to capture reversals or trade continuations, these models can significantly improve your execution. Let's move further and discuss these entry models in detail one by one. As we have studied before, there are two types of turtle soups, and the first type is TBS. This is the highest probability type because once you define your CRT range, the price sweeps one side of the range with a body close on the lower time frame to trap breakout traders. Therefore, it is essential that CRT forms at your key level, or the key level must be present where the CRT is forming. Once one side of the CRT is swept with a body close and Model 1 confirmation is achieved, you can confidently enter a long or short setup. As you can see in this price action example, the price swept the CRT low with a body close, gave Model 1 confirmation, and then used it as support for continuation. The opposing end, which will be your target, was successfully reached. Similarly, the same applies vice versa for a bearish scenario. Now let's move to the second type, which is TWS, turtle wick soup. In this type, prices creates a witch above or below the CRT range and closes within the range. Once one side of the CRT is swept with a wick and Model 1 confirmation is achieved, you can confidently enter a long or short setup. As you can see in this price action example, the price swept the CRT high with a wick, gave Model 1 confirmation, and then used it as resistance for continuation. Then you can target the 50% of the CRT, or the opposing end, which will be your target, was successfully reached. Now, we will discuss the next entry model, which is model number 1, and based on the order block entry. The last thick down or up-close candle that forms after sweeping the high-low of the CRT and gets engulfed is referred to as model number 1, or the order block entry. The last thick candle, bullish or bearish, before the price reverses acts as the order block. Once this candle is engulfed, price closes below it, it provides confirmation for entry. In this chart, after the CRT low is swept, the market forms this last bearish candle that gets engulfed, indicating a bullish reversal. This serves as the confirmation to enter a long trade. Similarly, the reverse applies for bearish scenarios. This method is highly effective for identifying precise entry points and aligning with market structure. Continuing with the next entry model, we now focus on the inversion entry model, which acts as specific price behavior involving fair value gaps. An inversion or IFVG occurs when a previously unfilled fair value gap gets violated, price breaks through it, and is later retested as support or resistance, often after sweeping the high-low of in this chart. You can see the CRT low is swept, and this old fair value gap gets violated and price returns to retest the IFVG. This retest acts as a support zone, aligning with model number 1 confirmation for a bullish entry, and the price targets the opposing CRT end. This model combines market structure with institutional price levels to improve entry accuracy. As we move to our last entry model, which is the breaker entry model, which builds upon the concept of violated order blocks. A breaker is an old order block that has been violated, price breaks through it, and then acts as a support or resistance level for price continuation. Identify an old order block in the price structure. When the price violates this order block, it signals a shift in market structure. The order block is then retested, acting as a support or resistance level, providing a precise entry point for continuation. If you miss the turtle soup, inversion, and model 1 entries, you can enter in the breaker as well, and also most, if the time when a breaker is just sitting above or below the last fair value gap, the price didn't rebalance that FVG, and retesting the breaker, and move to the target. In the chart here, you can notice this old order block is violated, and the price returns to test it as support. This retest aligns with the continuation of bullish momentum, confirming a high probability entry point. For bearish scenarios, the same applies but as resistance. The breaker entry model is particularly useful in trending markets, as it allows traders to align with the prevailing momentum. So now, let's move on to the live charts and look at some live examples of how these entry models work and how to trade them accurately. So, let's move on to the charts. Here we have the 4-hour chart of the S&P 500, and we are going to find a valid CRT here. Look here, as this is an old low that will act as a key level, so let's mark it. Along with this, you can also see we have an imbalance here, a fair value gap, so let's mark this as well. At the same time, we have 2 key levels here, making this a very high probability setup. Notice here that this is our CRT candle, and the next candle has swept the CRT low while respecting both key levels. So, the next candle, which acts as the distribution candle, can be expected to be bullish, and that's exactly how the price has behaved. Next, we switch to the lower time frame to find a lower time frame CRT. You must always observe this because it serves as a form of confirmation and makes your setups highly probable. Now we've hopped onto the 1-hour chart, and here you can notice that the low of the last big, bulky down close candle has been swept by the next candle, which has closed within the range. This is our lower time frame CRT, so let's mark its high and low as a range with red lines. We have marked the lower time frame CRT. Now let's switch to an even lower time frame and see how the entry models work. Let's hop onto the 5-minute chart. Remember, it's crucial to pay attention to time frame selection and alignment and follow this properly. If you want a detailed lecture on time frame selection and alignment, show your interest in the comment box, and I'll create a detailed video on this soon. So, finally, we've switched to the 5-minute chart. Here, you can see that the price has swept the CRT low, with a body closing after hitting the key level to trap breakout traders, causing them to take entries on the retest and get stopped out. So, let's mark this as the turtle body soup. As soon as you get confirmation of Model 1 after TBS, you can take an entry. Here, the price swept the CRT low and hit the key level, then violated the last fair value gap with an upward close. This is your inversion entry. If you use this, there's no need to use the 2022 model, as this is considered an advanced market structure shift. So, we've marked this, and here, the price closed above the last thick down close candle, confirming Model 1. Let's mark it. And as soon as the price retests this IFVG after closing above it, you can enter by placing your stop below this IFVG and targeting the high of the lower time frame CRT or the opposing end of the 4-hour CRT. If you want to take an entry from Model 1, you can also enter here by placing the stop below the last down close candle and targeting the opposing end of the CRT range. If you happen to miss both these entries, you can also take a breaker entry, as shown here. This is the last up-close candle breaker. Let's mark it. It forms a pattern like this: low, high, lower low. When the last high breaks, the last up-close candle becomes the breaker. You can see that as soon as the price closed above it and retested, you could take an entry and target the opposing end of the CRT. All these entries can also be used in the same way for bearish scenarios. Another entry model is the kiss of death, but I wouldn't recommend it. Just focus on these entry models and choose any two according to your preference. Backtest and forward test them repeatedly, and once your confidence builds, apply them in live markets. I hope you enjoyed this video. For more insights and trading information, you can follow me on X, Twitter, or join my Telegram channel. Links are provided in the bio and the video description. Good luck, traders, and see you in the next one.